Hello and welcome, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and you're watching another session of our earnings review. Today, we are bringing to you a marquee real estate company, Ajmera Realty and Infra Limited, and Mr. Dhaval Ajmera, the director of the company, is now joining us to discuss with the results, which have been stupendous. The numbers actually are looking quite strong. We actually have seen overall the volume actually has been up in the positive territory. The value basically has moved up 19% up versus last year for the third quarter. We have seen collections moved up 40%. Revenue has been up 15%. There has been a sort of good strong growth in EBITDA also. EBITDA margins basically having around 29-30%, and net profit also basically has inched up around 10%. So overall, it's looking like a very strong performance versus the last year. Couple of projects also, but I think we'll discuss slightly later. Let's talk to Dhaval. Dhaval, it has been a very strong quarter. Help us understand the headline numbers and what has been the primary reason for such a strong number.
So thank you very much for inviting me. It has been a pleasure to be part of this conversation. We are really excited and happy with the company's performance has been, quarter on quarter and year on year being getting improved. Obviously, this shows the strong, resilient real estate market which India benefits and has. And at the same time, this also shows that developers like us who have been in this business over the last so many years, who have been delivering, who have been consistently moving ahead. I think preference towards these kind of developers has been always better or more now, I would say, as compared to earlier. So if I have to, look at our results, I would say that in terms of sales value, we have been, this year has been, tremendously very gone really nice. So like in this 9 month ending, we have done 701 crores of advance sales, which has been, a great performance for us, as if I have to compare my last year's entire year's advance sales was 600-ish crores. And this year, in 9 months, we've reached 700 odd crores. So that shows the kind of the growth which we have seen in the company. We've also this has been backed with good launches, good performance in the existing projects, and few good launches which has really pushed this kind of numbers. And we are hoping and we are going to continue like this even going forward in the future pipeline. One other interesting part which has really come up is that our PAT margins has increased, and year on year, my PAT margins, if I have to say, a 9 month or a quarter, a 9 month year on year, if I have to say, the incremental PAT is about 80%. So which is actually really encouraging for us, and we are seeing good performance coming our way. So all in all, we continue to we are hoping and we are moving in that direction that we continue to with this growth trajectory, and the with the kind of future projects which we plan to bring on the table, which will help us continue with our growth cycle as well.
Okay, and we'll talk about the projects in my next question. But before that, I want to ask you, let's also understand how has been the trend on the raw material cost, the broader sort of cost drivers here, because the last year, first 6 months was slightly inflationary. We have seen some moderation. So how it has been for you and the industry both, and how's the trend looking like for the fourth quarter?
So I would say the cost of the raw material, if I have to compare it pre-COVID and if I have to compare it post-COVID. So like even today, the cost of the material is higher than what it was pre-COVID. So let's say I'm just giving as an example the steel which was available at 45 rupees pre-COVID on an average. Today it is available at 60 rupees or 70 rupees or 55, 60 or 70 rupees depending on the thickness, etc. However, post COVID, that 70 was 90. So, yes, from 90, it has come down to 70 or 60, but it has not gone to 45. So, that's the primary difference, I would say. And that applies to majority of the material today. It's not that we are either at pre-COVID levels or lower than pre-COVID levels. So, definitely, the cost has increased as what it was earlier. There is no doubt about it. But yes, there has been a relief. There was a rise in the cost material or the raw materials or everything last year, which has come down. The relief,
But then,
not completely. However, that has been compensated with the incremental interest rates, which is still making the cost higher.
Yeah, and actually I was coming to that point only. And I was asking you, so suppose basically the prices have gone up and now they're moderating during that time or during the current time also, for our viewers, how have been actually you sort of managing that sort of cost increase? Were you able to incorporate that and from the perspective of increasing the pricing in the launches? Were you able to spread that within your sort of portfolio baskets? How you were able to manage that cost?
So, we as Ajmeras were very clear and I'm sure most of the companies, well, when we came out of COVID and when we saw this kind of price hike, but we also saw there was a great demand, which was moving, which was actually riding the company or anyone's company or any developer. So, I think, there was a time there, to an extent, every developer has taken over or absorbed the cost within their profit margins or cash flows or whatever it is, because they really didn't want to spurt up the price and then have a less velocity of sales and then again get into those cash flow management issues. I think it was a better decision, and most of them has taken like us, where we probably absorbed the cost, but however we were also very clear that if this trend continues, which we knew, we were hoping that it wouldn't, and it will taper down a bit, and which will help us move ahead. At the same time, yes, there has been an incremental cost in the sales also, but it is not as dramatic as what the cost of the raw materials were, right? So that incremental has not been done. Everyone has increased their prices to 2%, 5%, 10%, depending on where the project is and where it is about. But it's not been as dramatically high as what we saw the raw material cost and the incremental interest cost which is happening in this particular financial year or this year. But there has been a slow which has been slowly getting absorbed. People are accepting it, and they also understand there has been an incremental inflation. There has been an incremental interest rate rise. With all these, definitely the price is going to go higher, and that's been a fairly acceptable value. And I am happy that everyone has not dramatically increased, been very sustainable, and which is good enough.
Well, just one point here: 13% as the average cost of debt, and you have been again successfully reducing the debt quarter after quarter, which again has been a positive development for the company here. On a sort of debt perspective, is that a strategy, a thought, less sort of thoughtfully designed strategy that every quarter there should be some debt reduction?
So, we internally are very clear because we have two type of debts in our company. One is a corporate group corporate structure debt, and we also have a project related debt. We want to reduce or dramatically bring down the loan from the group entity level wherever they are sitting at the group. But project will depend on the project, and within that project, we will continue to take debt and move the project ahead, because that cash flow, that management will be done from the project itself, and that will help the project take it ahead. So we are very clear in the next 2 to 2.5 years, 3 years, we should bring down the GCP loan to almost zero, and then wherever the project requires a debt, whichever project requires a cash flow management, we would continue to take that loans only.
So let's talk about the exciting part of the results here, and those actually are related to your individual projects. We have seen strong sales across the Mumbai projects also. So help us understand the key driving points from the individual projects and how we are actually looking at the trend from here to the fourth quarter with respect to projects.
So, we have been, if you see over the last few 2 years or so, we focused a lot on a few projects which were quick in and quick out. So, like, just to give you an example of our Greenfinity project, our Sikova project, our Nucleus project in Bangalore. These projects I have, just started, like, just to give an example, Greenfinity we launched in January 21. And today, we plan to hand over this project by April, May 23. So it's about 24, 27-month cycle. And today, if you look at this, the success of that is that we are 70, 80% of the project sold out. And we have,
Absolutely.
we finished up the project in terms of our superstructure and everything, and now we are towards the completion and finishing stage. Similarly goes our Sikova project, right? So even that was started sometime in January, February 21, and by March to May, we will be handing over. Same timeline, same everything, 80% sold. And that actually made the project quite successful. It made it up and running quickly. And also, if you look at Manhattan today, right? Manhattan we launched in the month of April, and in the last 9 months we have been we are 40%, almost 40% sold off in the entire project. So that's been a great success story for us.
I just want to jump in between on Manhattan. So Manhattan is the one which is a higher price project. I'm just guessing. Please correct me if I'm wrong. Perhaps there could be better margins also. And if it's 35% sold and we have more to come, should we expect it over the next 2 to 3 quarters? Perhaps this one could be where we'll have some margin accretion also on a console basis.
So yeah, obviously, the last quarter, our sales were spot up because we had a great launch of Manhattan. But now Manhattan, what we see is probably we will have one or two more launches in between as a marketing strategy. But overall, it will be a great sustenance project, which will continue in the next 1.5, 2 year cycle is what our guess is. In that timeline, and we will continue with a sustained sales momentum is what we are seeing, because even right now with the kind of interest hike we have seen, people being a little resistant, but still the numbers in our monthly quarters or quarterly numbers have been quite encouraging. So we see that these continuing, and obviously Manhattan being our own land bank which has been with us, and obviously it's part of our the margins are definitely better than as compared to a new project, probably like Sikova or those which are on new lands, but this is an old land which is already paid and owned. So definitely the margins are a little higher as compared to other projects. So that continues with it. But having said that, we also are on the path of 5x growth, where we are internally, and we are going to launch, as we have said that last year was like in this year we had told that we will launch Manhattan, we will launch Juhu as our project, and those both projects have already launched by now, and we have another one or two projects to come in this coming quarter, and we are hopeful to announce this soon. Okay, in this quarter we will have one or two announcements coming, and then going forward in the further years, further quarters, we will have a few more project announcements coming. So business growth and development growth is continuing to grow as planned, and we also continue to acquire or look at acquisitions of new growth development in different areas. So that is something which we continue to do right now also.
Sounds that definitely actually sounds sort of music to the viewers. And from there, I also wanted to ask you, Bangalore, how's that market doing for you? You have a couple of projects there. What's the trend looking like, and how the projects doing?
So Bangalore has always been a very steady market for us. What we have observed is, although we don't have too many projects in Bangalore, we have right now two or three projects which are going on. But all these two, three projects, what we see is a consistent development happening in that project. It's not like I will have a rise of obviously any launch will have a rise, but otherwise it's been a consistent sales. And we now with the project already launched, and we are having a few marketing launches coming up in a few projects of ours that will have a bit of a spike, but otherwise we see a consistent growth market happening or sales happening in those regions. And we are also looking at a few more acquisitions in that market, which will also help us continue with our growth trajectory.
Okay, and from the perspective of residential versus commercial, sort of how's the commercial environment looking like? I am also seeing a nucleus commercial portfolio that perhaps will start seeing sales sometime later. But how's the overall commercial environment, both in Bombay and Bangalore, looking to you as per your
So
projects?
So if I have to compare our Bangalore project, Bangalore market, what we have observed is always been a ready to move in market. And now that nucleus project of ours, which is ready, we are now going to see, and we are definitely seeing a lot of inquiries coming for that project now because it is ready. So we will see, hoping to see a good conversion happening very soon. And the Ghatkopar Sikova project of ours was a boutique office concept. When with that boutique office has been like more of an entrepreneurial driven or like a those kind of people which actually buy those offices. And with India actually growing, this actually shows the economic cycle being a very positive one, and that is why we've seen, even though it was when it was work from home concept over the last 1 year, which has now slowly been fading off, but last 1 year was a very great work from home concept, but we still saw a great rise in terms of the sales happening, because we thought we probably might not see that kind of sales because of the work from home concept, but it turned out otherwise, and it was in a very positive direction. And as I told you, 80% of that is already sold, so we are not too worried. We just left with 20%, and we are very confident in the next 4 5 months we should be out.
In fact, a couple of quarters post the second wave of COVID, we actually saw the highest ever sales happening in the industry in Bombay. So again, that tells you again what has been the dynamic for the real estate sector. I was just reading out some of the numbers here. FY24 launches about 0 0.4 million square feet. Give us some sort of numbers here as we move towards the last questions here. Some numbers for the fourth quarter. What is sort of amount of square feet which is coming out? Any sort of numbers which we can read into?
So in terms of numbers, we will continue with the existing launches which we've already done. I mean, we are very hopeful to, probably almost near coming to a nearing end to Sikova and Greenfinity project. Manhattan will continue to have its consistent sales over the next 3 months. Bangalore also will continue to have its consistent sales coming over the next 3 months. We are hopeful to have some traction coming in the nucleus commercial building, and we are hoping to have one launch and one project announcement coming in the next 3 months.
Okay, so I think that actually sums up as a steady momentum for the Ajmera group. Dhaval, thanks a lot for showing all the patience and
Thank you.
answering us all the questions. It was lovely having you on the show. And
Thank you.
with
Thank you
that,
very much. Likewise.
dear viewers, it's a wrap on the show. I hope you enjoyed it.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.